Good afternoon, everybody. Wow, that was an impressive presentation, Delta. Really some good companies at this forum. Christian, thank you very much for having us. Kai, this is a really good thing for us to be at with our story, and at a particularly good time for gold. There we go. There's the cautionary notes. I want to start with this slide. For investors who've been watching the gold price go up and the equities languish, I want to show you this slide by Crescat. It's illustrative of the margins that are in the gold business right now and why we want to be investing in development companies like Delta, like Revival Gold, companies with high-quality projects moving forward, in our case, towards production in the next 3 years. I'm a mining engineer by training. I came back into the business in 2017 to create Revival Gold. And the reason why is pictured on this slide here. The blue bars represent the pace of global production in the gold industry, and the gold bars present the pace of global discovery, which is running at about 1/5 the pace of production. And that's before we get to engineering, construction, operation, and the production of gold. So there's a big disconnect between the pace of production and the pace of discovery, and I think that's very good for gold developers. Our company is focused in the western United States. We have 2 projects with a total of 6.2 million ounces of gold in resource, and we're targeting 150,000 ounces of gold production from the first phase of operation. A veteran gold team, and I think what's unique about our company is that we're focused on brownfield sites where we have existing infrastructure, which gives us lower capital to progress our projects, and it gives us the opportunity to move forward with better understanding of the rocks and how they'll perform, lower risk for investors. Capital structure is pictured here. We have about 200 million shares outstanding, and a market cap of about $65 million. Ownership is quite strong by institutions, including in Zurich, Conway Gold 2000, in the United States, Donald Smith, also Sun Valley Gold, US Global. So strong institutional ownership, which I think demonstrates the kind of support we have in the market. Management's at 15%, and I should note that the management interest in this business has only grown since we got started. We're trading at about $7 an ounce in the ground right now, which is where the leverage comes for investors coming into development and exploration companies. In fact, we offer 31 ounces of gold per 1,000 shares held. So very good way to get exposure to gold. This map shows the project locations in the western United States. We're in Idaho and in Utah. In fact, Utah was ranked as the #1 jurisdiction in the world for exploration and mining investment just recently by the Fraser Institute. Idaho's in the top 20 as well. These are great places to be mining and developing gold projects. Our total resource, I mentioned on the outset, at 6.2 million ounces, of which 2.4 million ounces are in the M&I category, and 3.8 million ounces are in the inferred category. I'll show you some of the exploration potential beyond that, but we're already quite significant, one of the largest discoveries in the western United States in the last decade. This is a view over our Mercur project in Utah. You can see that we're in the foothills. This is a very dry location. It's about an hour from Salt Lake City, which is very advantageous for us from an infrastructure point of view. We have power lines, roads, existing office plant. This is a past producing gold mine, successfully produced about 2.6 million ounces of gold through the mostly through the 90s by Barrick Gold. We're focused on taking the current resource of 1.6 million ounces and 90 million tons through to a preliminary economic assessment by the end of the first quarter next year. We're really excited about this project. It's got our team fully engaged at the moment, and we're in a jurisdiction that has produced a lot of big economic deposits, including Bigham Canyon, just over the hillside from us. one of the biggest gold-copper projects in the United States. Our land position is some 6,300 hectares. You can see in shading in gray the position of the property and the location of the existing resource in red. The left side of that page is entirely unexplored in any modern sense. So we want to get in there and be looking for more gold along that 14 kilometers of trend. In the meantime, we're progressing the existing resource, 1.6 million ounces, to a PEA. The work on the engineering is going along very well. In fact, we completed 5 column tests for the heap leach recovery estimates for the PEA this fall. And we got 84% average recovery. And what's even more exciting about that is the kinetics. 90% of the recovery came within the first 5 days. That's really important as we think about cash flow from these mining operations. We want to be able to leach and get the gold out quickly so that we can deliver cash to our investors. A lot of exploration upside here. I won't go into the details, but I'll leave you with this. The last hole in the drill program from this project was 26 meters of 6 grams per ton gold in that lower grade blue horizon of sedimentary unit. It's all within 150, 200 meters of surface, and it's in oxide material. So we're really excited to be back to drilling in that project area in 2025. We'll get back to doing that. This is a picture of our Beartrack-Arnett project in Idaho. Again, I spoke about infrastructure and this advantage that Revival Gold has chosen by going with these brownfield sites. There's about $50 to $100 million of infrastructure savings right there in that picture. Power line to site, roads, the existing ADR gold processing facility. And I should note that our power is largely from sustainable sources. This is really important as we think about producing gold in the future. Hydropower at 5 to 6 cents a kilowatt hour. The Beartrack project is located about 1 hour from a town of 3,000 people in rural Idaho. Why is that important? That's important because it means no requirement for a camp, no requirement to fly people in, and lots of attractive community benefits for employees, which makes it easier for us to bring people on board as we think about taking this back into operation. The PFS completed in July last year is $170 million of NPV, 34% after-tax IRR, and we've got a relatively low capital to restart, given all that infrastructure, of $109 million. You can see on the right-hand side of the slides the resource on this project. It's quite large, so the first phase that I've outlined in the bullets on this slide is just to deal with the first phase heap leach. Beyond that, we'll look to go underground. Again, a large land position, 6,300 hectares, most of the mineralization along 5.5 kilometers of strike on the right-hand side of the slide, shown in red. We've got some wonderful intercepts in this system as we look to the underground, upwards of 71 grams gold over 10 meters. In the south end of the project, 10 grams over 11 meters. Within 115 meters, grading 3.5 grams. And the deposit's open. It's open to the south, it's open to the north, and it's open at depth. We've got a satellite oxide ore body off to the west side of the property. I just wanted to point this out because this is a section through the planned pit in our PFS plan, and a drill hole outside of that pit that averaged 4 grams over 20 meters in oxide material. Again, this is pointing to the exploration upside in our projects, even beyond the existing economics that we have in the PFS. Another picture, we have hit with every drill hole into this zone of mineralization over 5.5 kilometers of strike. It's an orogenic gold system. These things can go quite large, and they can run down to 2,000 meters at depth. There's the details of this in presentations on the tables, but lots of exploration potential on our project, some wonderful grades, a very competent rock, which makes for good underground mining environment, good technical factors for exploitation. And we've got blue sky beyond the existing resource, some 5 to 6 kilometers of additional structure beyond the existing 5.5 kilometers, which we've already outlined. And we own the 100% of the property position. The path forward for Revival Gold really is focused on a phased approach to development. The first phase will be to take our heap leach project in Utah through to operation at about 80,000 to 100,000 ounces a year of production. The second phase, the next series of boxes on this graph, in the next year or so afterwards, will be to bring the second project on. That's the first phase of heap leach production from our Beartrack-Arnett project. Another 65,000 ounces a year of potential gold production, taking us up to that 150,000 ounces. Beyond that, we'll look to go underground into those higher grade elements that I showed you earlier to the south end of our deposit. And that takes us north of 200,000 ounces a year. Again, I want to remind people, this is all in the western United States. This is from a very large resource, brownfield sites, supportive communities, low capital to take ourselves through into production. Our next steps really are focused on that PEA, and I think as we get through that work, we're going to see our multiple currently at $7 an ounce in the ground. Think about that. Gold at $2,700 an ounce, and development companies like ours trading at $7 an ounce in the ground. I think that's exceptional value and leverage for gold investors. And the upside is clear. As we take that project forward, we put more of our ounces of gold into mine plans and take them forward. The value re-rate is clear. And you can see that potential on this slide here. In summary, I would just point to the fact that we are a growth company. We have exploration potential. We have 2 very large gold systems, and these systems will continue to produce exploration results for us going forward. They are synergistic assets which allow us to have a common team, all based in the western United States, developing heap leach in the first instance, relatively low risk, relatively low capex, and moving towards production in a credible, deliverable plan. Finally, I'll point to the value in the company, trading at, as I mentioned earlier, $7 an ounce in the ground, or approximately 0.2 P to NAV. We have a lot of value in the stock, strong ownership, and I think over the next few months, as we make progress with that PEA and our permitting preparations, exploration into 2025, we will see a re-rate in the stock and lots of benefits for our current owners today. Thank you very much for the time and interest in Revival Gold.
Thank you.
Questions?
We got 2 minutes. Just one question from me. One of your peers, Troilus Gold, recently announced like 3 LOIs with several government entities, I believe. Do you think that's a viable plan going forward for Revival, or how do you plan to finance the projects to going into production?
Yeah, Troilus is another brownfields-focused company and has done a great job. Justin's done a great job there. Look, the U.S. government recognizes the importance of responsible mining and domestic production of metals. And that's true of copper, it's true of antimony, it's also true of gold. And I do think that we're going to see lots of support from the governments. Whether they'll actually write checks to pay for those mines or not is to be seen in the gold industry. But it's a very supportive environment. Of course, we've just had a Republican sweep in the U.S., and that's very good for permitting. It's very good for taxation and business generally.
Okay. Any questions from the audience?
You have mentioned your infrastructure that you inherited from previous operators. Are there any liabilities, especially on those tailings dams?
Yeah, very good question. No tailings dams on our Beartrack-Arnett project in Idaho, and a fully closed site at Mercur. And the important underlying aspect of this is that these are projects that were owned, built, operated, and responsibly closed by majors. So that's been done well. In fact, record award-winning reclamation, and that was part of our underlying due diligence, part of our underlying reason for taking these projects on. Now, you might ask me, well, why, if it's so obvious, would Barrick have given this up? And the reason is, this is a smaller project for Barrick. Even 2, 3, 4 million ounces isn't important to Barrick, but it sure as heck is important to us, and it's great value and opportunity.
Thanks, Hugh.
Thanks,
Sure,
Kristen. Thanks for your question.
Later.